Hello everyone and welcome to today's Market Snapshot. My name is Craig Earle, I'm Senior Market Analyst at OANDA. Now I hope you all had a great weekend. The start of the week in the market has been relatively eventful in terms of major news flow. We've got a big week ahead in terms of economic data, central bank events, and of course there's the US presidential election next week, which has been stirred up once again over the weekend by the FBI reporting on Friday that it was investigating some new Clinton emails that it's got its hands on. This has really thrown the US presidential election back to the forefront of people's minds. Now, of course, a US presidential election never really falls too far from the front pages, but the fact that Hillary Clinton had built up quite a decent poll lead over Donald Trump, it started to look, to some at least, that the US presidential election next week was something of a foregone conclusion. We had seen the markets responding in such a way with things like the Mexican peso, which is seen as a key risk barometer for the election, well, a Trump risk barometer, I guess. Strengthening over the last few weeks as Clinton's lead appeared to be building up. But now we've got the FBI announcing that it's investigating these new emails, and all of a sudden we've seen a number of polls already that suggests Clinton's lead has been slashed quite significantly. I guess the key point here is they are investigating Clinton, but they haven't actually necessarily found anything to convict her with as of yet, or nothing has been confirmed. So what we've seen effectively in the market so far has just been a knee-jerk reaction. Should any other details emerge over the next week or so, then I'm sure the market reaction will be far more substantial. The other thing to take into consideration here is, while nothing has been found, no evidence has been found yet to suggest that she's done something wrong or done something illegal, it has still damaged her campaign regardless, because it casts that seed of doubt in voters' minds ahead of the election, and the FBI are now in this position whereby if they don't get this resolved over the next few days or before the end of this week, then there's going to be massive questions raised about what kind of a political impact they've had on this election. And should, of course, Hillary Clinton now lose the election next week, I'm sure there'll be a lot of people who will be seriously questioning the political interference that the FBI has had. Now, of course, the FBI has to proceed with its own investigations when new evidence arises, which is something that seriously complicates this matter. But now it just seems that the political situation in the US is a little bit more up in the air, and that's certainly been on the front pages of many of the tabloids over the weekend, and was the main thing that was impacting the markets earlier on in the session. Another story today has been the fact that the oil is now trading lower on the back of talks, I believe, over the weekend between some OPEC and non-OPEC producers. No resolution was found. There's still internal differences with OPEC with regards to any output freeze or cut. Members seem to be on board that an output freeze needs to happen, but then you've the likes of Iran or Iraq suggesting that they shouldn't take part in these. Does tend to create this kind of friction. We're also expected to hear some news out maybe later today in regards to OPEC output, which is expected to have risen again, overproduced once again. I think it's for September or October, which again is just adding to the bearishness in markets right now. Markets really had bought into this OPEC deal, rightly or wrongly, and now it seems the cracks are starting to show, and that is casting a lot of doubt on oil prices at these kinds of levels. I don't think anyone's going to be entirely surprised given how these things have gone in the past, but this was certainly one that the markets appeared to buy into initially. Like I say, it's going to be a big week in terms of economic events for the markets. You can see here today we've already had some quite important data, GDP data for the Euro area coming out in line with expectations, showing much better levels of growth than we've possibly become accustomed to in recent years. Inflation data was in line with expectations, so there was no massive market jolt in reaction to this, but core inflation still remains well below the level, well below the 2% target for the ECB, which again will put more pressure on them in December to find a way to extend its QE program or potentially come up with some more substantial measures. We've had income, spending and inflation data from the US as well. Personal income up 0.3%, which was slightly shy of expectations, but above the previous number, and still, I'd say, a decent number. But spending, importantly, up 0.5% here, so a bit of a bit of positive data for the US, given that the economy is so reliant on the consumer. The inflation data, the core personal consumption expenditure price index, is the Fed's preferred measure of inflation. As you can see here, it dropped on a month-on-month basis to 0.1%, but for me, the most important thing is the year-on-year figure, and here you can see it at 1.7%, only just shy of the Fed's 2% target, and I'm sure that's at a level probably at this stage, given the rhetoric that we've had from Federal Reserve policymakers recently, which they would deem to be, many of them would deem to be acceptable to continue to pursue another interest rate hike in December. We do have the Fed meeting this week as well, but no changes expected, coming so close to the US presidential election, and with no press conference due after. As I said, it's going to be a big week for the markets this week. Not only do we have the Federal Reserve decision on Wednesday, overnight tonight, early hours of the morning tomorrow, we've got the Bank of Japan decision. Again, no change expect here, as they adjusted their own monetary policy only last month, when they, rather than targeting increasing the monetary base by 80 trillion yen, they actually changed this and targeting the yield on the longer end of the yield curve, which effectively enables them to let the markets allows the markets to function in such a way that the yield curve remains at a point that the Bank of Japan deems appropriate, without having to commit itself to purchase these bonds every month. The two things that protects them from is, one, increasing their balance sheet more than they potentially want to, but also there's been all this speculation about there not being enough bonds for the Bank of Japan to buy, so this kind of alleviates the pressure on that a little bit. It'll be interesting actually to see if the ECB potentially adopts a similar measure at the meeting in December, given that it seems to be facing similar issues with German debt at the moment. We've also got the Reserve Bank of Australia announcing its latest monetary policy decision overnight. We've got Super Thursday in 3 days' time, with the Bank of England announcing its monetary policy decision. Again, it's expected to hold off on a further rate cut for now, because the data hasn't shown any significant signs of deterioration yet. But with it being Super Thursday, it means we've got the inflation report to come as well, so that just makes it that much more interesting and that much potentially more volatile for the markets. Friday, we've got the US jobs report, which of course is always a massive day, and the fact that again it comes only a few days before the US presidential election next week on the 8th of November does make it all the more interesting and potentially influential again. So plenty going on this week. That's only the highlights of the week. There's still plenty more economic data to come, and of course in the background we've still got earnings season happening, so again that could be a key sentiment driver for the markets. So like I say, massive week this week for the markets. In terms of what we're seeing today, we saw the Clinton story actually break late last Friday, which prompted a late sell-off in US equities. We saw the dollar weaken as well on the back of this, and we also saw things like the Mexican peso come off a little on the back of this. Again, a Trump risk barometer, effectively, given the threat which Trump presidency could potentially pose to the Mexican economy. Still, while we did see some dollar weakness, as you can see here on Friday, we are seeing it rebound. It found support against the yen around 104.40. That was a prior zone of resistance since it broke above the Ichimoku cloud. We appear to have found support here today, and now it seems to be edging a little bit higher. So dollar yen continuing to look bullish against this backdrop. If we can see 105.50 breaking, then I really don't think we're waiting too long potentially to see it moving back towards these 107, 107.50 levels. If we're looking at euro dollar, we did see that rebound on Friday on the back of the weaker dollar, but again we are seeing this starting to trend lower, and this continues still for me to look a little bit bearish at this stage. Of course, that's a very bullish candle, and we'll see how this continues to trade throughout the US session, which is we're just heading into effectively now. If we can see most of these gains reverse, and that may suggest that this knee-jerk reaction that we actually saw in the euro dollar was nothing more substantial than that at this stage. Of course, I'm sure more details will emerge over the course of the week. As I highlighted, Brent crude, WTI crude continuing to come off. In terms of notable levels of support, we've got around this $49 to $48 here. This is the 50 and 61.8% retracement of the most recent swing low to swing high, so that could provide something of a test, a support test for Brent crude. It's also this previous zone of resistance as well. We've also got the moving average band here, which could potentially offer some support here. WTI crude again, we are in an area where we have seen resistance before, so this is always a notable level of support. But I think $46 to $47 once again, 50 and 61.8% retracements of the most recent swing lows to swing highs. You've also got the moving average bands, and again previous zones of resistance as well. So I think that's going to be a big test for market sentiment in relation to the oils. But aside from that, like I say, big focus again on this week on the US. We do have other central bank decisions, which is going to take a focus. But the fact with the US, we're now in the week or so lead up to the election. Non-farm payrolls, Federal Reserve, and corporate earnings. I'm sure that's going to remain a major focus for investors everywhere. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.